Hey traders, Michael or Mini Frost here. You're here for another episode of Common Sense Market Analysis. Today is Turnaround Tuesday, November 4th, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, as you can see, we had a little bit of a turnaround Tuesday. We're down 1.19%, a little more than $8. And as I mentioned yesterday, we have a little tinfoil hat event coming up. This time, it's a supermoon, the beaver moon. This is just a random article I pulled up, nothing special about it, but tomorrow is going to be one of the closest supermoons that we've had all year. And we've discussed this many times, and if you've been with us for a while, you know that the market will either like to trade up or down into these events. And right before tomorrow's supermoon, we had a little bit of a turnaround Tuesday. Now, this doesn't mean I'm saying that this move was solely because of the tinfoil hat event. No one in the world knows exactly why the market moved this way today. Each person is going to have their own different reason. That's what makes a market in the first place. But in all honesty, there could be 1,000 different reasons as to why we were down 1.19% today. But just taking it at face value and looking at it in a technical analysis perspective, all Mrs. Market is doing is taking care of some unfinished business down below and is now heading to the 20-period moving average, home base, which we were previously extended from. Going over to an hourly time frame, getting a different perspective of this, I mentioned last night that a number you should write down on a sticky note is 675.65. That is the entrance to no man's land. From this low all the way to the gap down below, there's a lot of empty space, except for the fact that we had the previous all-time high coming in right around 673.95. We'll get into that shortly, but this area, the 675.65, was the entrance to no man's land. And the entrance to no man's land is a bull-bear battle. Okay, from a first-time, best-time situation, that area could have been utilized as some short-term support. This is one of our favorite trades in the books. It's the spike the low and rip it right back up trade. Okay, we spiked the entrance to no man's land, this low right here, and then ripped it right back up. Going over to inside the numbers, the morning game plan, this was written well before the market was even open. I was saying that the entrance to no man's land is a bull-bear battle and can act as some initial support, at least from an intraday perspective. The spike the low and rip it right back up trade. Said that again at 9:10, and then a final time at 9:27, 3 minutes before the market even opened. This can be an initial spike the low and rip it right back up trade for a possible scalp with potential. This was such a perfect setup for that exact situation. Okay, we spiked the low and went right back up. But the funny thing is, where did we go right back up to? If you remember from yesterday, and again, this is why it's so important that you need to write these numbers down on a sticky note. I gave you these numbers last night. The 679.25 and the 679.90. Okay, we were talking about how that was an important support zone coming into it towards the downside. But as we know, and I mentioned this yesterday, is that these numbers can be utilized as overhead resistance coming into the number towards the upside, which was the exact case today. Going back to the morning notes, if we start to push up higher, she'll want to head towards that important support zone that we had at 679.25 to 679.90. From yesterday and last week. Okay, but now this can be utilized as overhead resistance on the way back up. And what do you know? The exact high for today is 679.96. We'll give that a funny how that works. I think I know my numbers. So that was some of the intraday activity for the spiders. But now what about some of the larger picture stuff? Okay, what should we expect later on this week? Well, we are coming back in to home base, the 20-period moving average. That happens to coincide right with this gap right here at 671.76. Okay, one thing to mention, and we'll draw a line right at the entrance to no man's land again. We could zoom this in a bit, and we can see that we did close below the entrance to no man's land. The longer we stay below that number, the more likely she's going to want to go for a run of the 20-period moving average and fill this gap right here. As I mentioned earlier, we had the previous all-time high. That number was coming in at 673.95. That's a recent breakout area, and markets love to come back and retest those breakout areas. But, capital B-U-T, we did kind of come up a little bit short of that number. Today we made a low of 674.58. So technically you can constitute that as a first time, best time situation. So I'm not looking at that number to be a trade on the board, especially since we came up short the first time, but a little spike below that number, heading down towards the 20-period moving average, even going as far of filling this gap right here, then that certainly starts to raise an eyebrow. that's also in the vicinity of that breakdown candle high, which can now be utilized as support on the way back down. Okay, it doesn't have to be the exact high, but it's around 20% of the high of this breakdown candle. You can see that we're starting to build out the full stack. We try to stack up as many reasons as possible as to why we should take a trade, making it a high probability trade setup. All right, I'm just going to clear up these lines right here, and I would highly recommend getting out your sticky notes because I'm going to give you another number to put down. That number comes in at 66743. This is an important mathematical number that I worked out. It happens to be a little spike of this recent breakup candle low, and that number was certainly important before. You can see right here the market found a high at that number. Right here it was important as well as it started to use it as support on the way back down, and somewhat important over here too. So I would put these numbers on your chart. This is an important area for the market. Okay, I'm expecting it to be an area of support at least from an intraday perspective, and we'll see what happens when we get a little bit closer. If all else fails and we're in a little bit of a woodshed type of situation, the next destination down below is going to be around the 50 period moving average. We'll have all the numbers ready for tomorrow and obviously later on this week for Inside the Numbers and live room members. Speaking of Inside the Numbers and live room members, let's take a very quick tour around Inside the Numbers. Okay, I already showed you a little bit of Inside the Numbers before. Obviously, we had that trade at no man's land, and then that overhead resistance zone up at 679.25 to 679.90 that happened to be high of day. How you doing? But remember, we don't only just trade the spiders in the live room and Inside the Numbers. Okay, we also have stocks on the move. Today we had 5 stocks on the move. 3 of them hit their entry targets. We're only going to look at 2, that is Palantir and MU. Palantir was gapping down a significant amount. We were down 7.94% today. That could have been another reason as to why the market was down today, but Palantir came right into the 20 period moving average, home base. Okay, the market will always go back to home base. Why? Because they don't like to be too extended from it. Take a look at this. If we zoom in a bit, we can see we have a gap right here. That's a little spike of the 20 period moving average. We never got there, never went and filled the gap. So that's now declared some unfinished business. But what else I see is this low right here, 186.78. Okay, this also could have been considered a spike the low and rip it right back up trade. But looking at this thing on a 5-minute time frame, this is from Stocks on the Move. We got entry number 1, 2, and the stop. As you can see, we blew by entry number 1 and 2, and even spiked the stop loss by a bit. But remember, we operate on an hourly close basis for the stops. Okay, so Palantir only spiked the stop loss the first 10 minutes of the trading day, fought right back up, started closing above our levels. As you can see, this candle right here came right back down exactly to that stop. So you could certainly see the importance of that number. Also, you could see it right here towards the end of the day, came right back to that number, bounced off of it. But if you followed the rules, you followed the game plan, and you executed, then you got paid. And a lot of our live room and Inside the Number members got paid with Palantir. All right, what about MU? Entry number 1 at 220.95. How you doing? Made a low of 220.30. We'll give that a how do you like dem apples. This was a no heat trade. This was obviously a little bit easier than Palantir. Palantir, you kind of had to take a little bit of a ride down. But on the other hand, MU provided us a nice no heat trade within the first few minutes of the trading day. How you doing in MU? And again, we're not going to take a look at NCLH. This hit its entry target at lunchtime, aka torture time. We're not going to trade that tape. But I urge you to pause the video, read the notes, and go back to the chart to double check the work. Everything's in here for you. The morning game plan, the intraday updates. As you can see, there's a ton of intraday updates. So you know exactly what's going on, where the market's heading to, what the numbers are. We also have an afternoon write-up. Stocks on the Move, which you guys just saw, and that's been on absolute fire recently. By the way, if you took any of these trades, the spiders, MU, Palantir, please help a brother out. Okay, I'm not the brother. Let other people know if you're making money with the live room or Inside the Numbers, or the lazy swing trader, which had a 100% win rate in October, and we had another 100% win rate in August, and in September we only had 2 losses. So please help a brother out, let others know how you're doing and how other people can benefit from the numbers. As always, let's go ahead and take a trip around the world, starting with Camp IWM, my number 1 favorite market leading indicator. We're down 1.73%, $4.24, and we're now closing below the 50 period moving average. But what's interesting is take a look at the high today. The high was exactly 244.06. Our important number that has been on the board for weeks now is at 244.30. So we tried to recapture that number, wasn't strong enough, closed below it, and now we're even closing below the 50-period moving average. Okay, we pretty much closed right at the vicinity of this big time breakup candle low. It's not the exact low, but it's around 20% of the low, closed around the vicinity of it. So we could get some normal back and forth behavior, some garden variety movement, maybe another retest of the 50-period moving average towards the upside. But if we start to close below this low and this breakup candle low, then the next destination down below is going to be right at this low right here, at 237.56 from this big time breakdown candle. That area is important. You can see that it's important, not only from this breakdown candle, but again right here, nailing it on the dot, again right here in this area, pretty much during this whole entire time. So that'll be the next destination towards the downside. On the flip side, IWM is going to want to try to recapture that 244.30 to 247.18 number. The 20-period moving average is right in between those two numbers. If we stay below and continue to close candles below, that will open the door for another leg lower. We'll have IWM numbers ready for inside the number and live room members. Don't you think the transportation department knows about that trend line? The answer is absolutely. As you can see, we nailed the trend line on the freaking dot. Still closing candles above that pivot number. Made a low today of 15,681, so got kind of close to the pivot, went back for a test of the 50-period moving average. Remember, we have a ton of moving averages around the pivot. We got the 50, 100, and 20, so it's only natural for the market to come back to that area. But if we want any upside potential, we have to get above that trend line and start to close candles above it. And if we do, then the market can even utilize that trend line as support on the way back down. On the flip side, because we always have to be the umpires calling balls and strikes, we can make our way down back towards the pivot number, retest the trifecta of these moving averages, and then if we get below and close candles below, that will open the door to some unfinished business down below at 15,454 and even the last line of defense, the 200-period moving average. What about the Q people? We're down 2.03%. It's a little bit different from the spiders. As you can see, we have that candle that's pretty much in the middle of nowhere. It's its own island, so to speak. In the spiders, we've already went and filled that gap, and we're now even closing below the entrance to no man's land, right around the 20-period moving average. Now going back over to the Qs, we can see that we haven't even touched that gap yet at 617.10. Okay, we came up a little bit close. So that can constitute as a first time, best time situation. Obviously down below, you got the 20-period moving average. You have another gap down below that comes in at 610.58, right around the breakdown candle high and a recent breakout area. So it looks like the Q people is lagging behind just a tad, not really in the sense of how much they're down. Okay, they're down more than the spiders today. We were down 1% in the spiders, down 2% in the Qs, but I'm just talking about the positioning of the Qs right now on the chart. Okay, haven't filled this gap right here, yet on the spiders we did. We'll see if the Qs tomorrow or later this week is just gonna blow by that gap. Maybe just go down to the 20-period moving average, go down to this second gap down below. The spiders and the Qs aren't going to match up perfectly, but it'll be interesting to see how the Qs want to treat this area right here. Either blow right through it or find a little bit of support. But as of right now, I see a little bit of a first time, best time situation, so I'd expect them to at least get down to home base and even go as far as filling this gap down below at 610.60. Last but not least, we got SMH shaking my head, the semiconductors. Smash mouth. We're down 3.64%, came up a tad bit short of this gap right here at 351.14, so that's now going to be some unfinished business. We're already back down to the 20-period moving average, slightly above it, and what do we got below? Well, we have this gap right here, that's a spike of the 20-period moving average, that happens to be at 344.80, coinciding right with this breakdown candle high and around a recent breakout area. So if the first time, best time situation holds true, and we just go ahead and blow by this gap, blow by the 20-period moving average, this area right here at around 344.80, 344, give or take, that area is going to be important. Okay, we're going to have SMH numbers ready for inside the numbers and live room members. What about some numbers that we had in inside the numbers today? For SMH, we had support number 1 at 356 and overhead resistance at 361.60. As you can see, found support right at the first support number and found resistance at resistance number 2. We'll give that a how you doing and how do you like dem apples. Have I told you guys how much I appreciate each and every single one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information, put it on a sticky note. We're gonna pull the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm Mini Frost. Please don't forget to like, comment, subscribe, all that good stuff. If you made money today, leave a comment down below. Let others know how well the numbers work. And with that said, we'll be back ready to go in uniform for Hump Day tomorrow for the morning session. And we'll be back in the video later that night. I hope each and every one of you has a great rest of your day. Stay safe and take care now, folks.